Hello again, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and I'll be breaking down this week's price action, but most importantly, talking about our upcoming week ahead. Let's get into it. As always, I'll be breaking down this week's price action by looking at broader market analysis, then take a look at the currency baskets, any major news events, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at last week, it was more like a quiet week. We didn't really see a whole lot of change as far as the price action goes. The equity market, again, remains bullish. So we continue to grind higher here, making new all-time highs. So the market sentiment, again, remains positive. Now, as far as the currency market goes, we take a look at the central banks. We had one central bank last week, the ECB, and they got raised by 25 basis points. And that was, again, along the lines of what was expected. So I think markets are doing a really good job where we are not really getting a big sort of a movement off of these the central banks because these are all priced into the news. So we just take a look at it. The euro didn't really move as much. Now, one of the things that we noticed last week was that we had a lot of inflation data, and all that data is, again, below estimate. So we are at the point where the inflation is not the issue or the worry. Now it's all about what the job market is doing, what the economic data is telling us. And then based on that, the central banks will move slower or faster when it comes to rate cuts. But they're all kind of moving along the same lines. Now, in the crypto world, we got a nice little breakout out of that range. And mostly I would say that it was the Bitcoin that did look the best so far, has been continued to outperform. And that's been the case. Now, let's take a look at the economic data. So if you look at the economic data, here we are, these inflation figures. You can see Canada below expectation. We have a UK below expectation. We have New Zealand below expectation. So seems like a global phenomenon. It's pretty much like how 2 years ago we had all the inflation was really kicking up across the world. Now it's the same thing. It's going down across the world. So just like how in 2022, we have all the central banks raising interest rates. Now everybody's cutting interest rates. Now the big contrast between 2022 and 2024 is sort of a market movement. You know, at that time there was a lot of big percentage moves are taking place. Big movements took place. Now those movements seems to be small and this seems to be contained. So volatility remains low as we are in this rate cutting cycle. So it all goes back right now. It's about the economic health here. Now taking economic health, look at the Aussie employment report. Came better than expected, the drop in unemployment rate, and an uptick in the employment change. So economy is doing well. And that's the thing that we're seeing here. While the inflation is coming down, the economic data still is doing okay in a lot of these countries. Now, if you take a look at the data out of the US, you can see an uptick in retail sales. That's positive. People are spending money, and market seems to be happy about that. We are looking at the retail sales, and the employment claims, not a whole lot of change there. But overall, it's positive data that we're noticing. Here we are with the UK, positive 0.3 data as well. So we're in the market cycle where consumers are happy, the rates are coming down, and there's not a whole lot of change. So I think that's really where we are. And that's why you're not seeing a whole lot of volatility, is because we are kind of the sweet spot where there's not a whole lot of worry. Remember, markets kind of move along the lines when there's a lot of worry in the markets, and that's not really where we are at right now. Now, let's just take a look at the last week events and take a look at the numbers and see where the big movement was. So here we are with the market performance, and you can see that S&P, they added on gains 0.86, Qs were up. Crypto really had a nice jump here, 10.5%. This is usually how we see a nice movement in crypto. But we are seeing gold continues to climb higher, making new all-time highs. And we saw a big drop in oil. And that oil drop is really what keeps the inflation lower. Remember, that's the thing here, that oil really had played a big component in terms of inflation. Now we're seeing, that seems to be coming down here. So as far as the chart goes, what do we see here? Any change? No. We have the resistance here, and we got some couple of big candles in there as far as the red candle go, but overall you can see that we are slowly grinding higher. Remember, we're going into this election, and when you take a look at the chart, markets don't really seem to be worried as much, regardless of who's going to win. I think the polls are kind of going back and forth, but then market doesn't seem to care. So overall, I don't see a whole lot of reasons to sell because the market seems to be in a good shape here. There's not a whole lot of worry over here. Now, if you take a look at outside of that, let's take a look at the numbers in the currency markets. You can see that this was not the best trading week. I mean, the last couple of weeks were okay, but this week was not a great trading week because, saw a lot of muted movements. You can see that the Aussie only down 0.18, Kiwi down 0.16. Again, these are not a big percentage move number. The biggest percentage move really you're seeing here, dollar was up and pound was up. Like, that's pretty much it. Like, that's a 0.5% move. Everything seems to be like not moving in a big range. Euro was slightly lower, CAD was slightly higher. So we'll take a look at the trend scores and if anything changed. But as far as the movement goes, this week, again, not a great week, which is fine. That's how trading works. It kind of goes in waves where, you have a high tide and you have a low tide. And when you have a high tide, there's a lot of movements are happening. And then you go in a low tide where things start to consolidate. And that's really what we're seeing here. But again, whenever you get these consolidation periods, this is where you can really go back into the planning phase and talk about, okay, where is the next big move coming? What else I can expect for as far as the movement goes? Now, here we are with the crypto world. You can see that Bitcoin did almost 10%. Bitcoin Cash was up. Litecoin was up. But if I take a look at the technical patterns, Bitcoin is the one that stands out. Getting to some key levels here as we speak. We're looking at cryptos down almost at about 69,000. So that's really what the trade's kind of working here. But still have a good overhead resistance ahead. Now, let's just do our market analysis and let's take a look at where the market outlook is. I will take a look at the next week events. Now, looking at our market outlook, nothing, like I said, has changed for me. We are at a +3. All the things are positive. And that's really where we are in the markets. So we don't want to speculate too much until and unless market really gives us a reason. We get a blow off top or we start to see more downside price action. That's not what we see here. So always work with the price action that's in front of you. Now, if you take a look at the outside of that, take a look at the yields, you can see that the bond yield is kind of stalling here a little bit. So the bond yield is telling us, the way we got a big little jump here on that positive economic data, things have kind of stalled over here. And that's what we saw in the US dollar as well. It was grinding higher, but almost stalling a little bit here. So maybe there's a bit of a slowdown at the momentum, but remember, it's just waiting for the next economic reports to come out. And that's really where we're going to start to see a lot of movement. So something we're going to watch for next week. And most importantly, the following week, when we get the next jobs report, that's the one that you want to go for because last jobs report really changed things. We saw big movements across the board. So could we get the same kind of price action in the next jobs report? That's the one I think going to be a next big trade. Now, if you take a look at the next week events, well, there's a handful of them, but like I said, I'm more excited both for the following week because that's really where we get more central banks and more economic events. But next week, what I really like, first thing, let's talk about the Bank of Canada. Bank of Canada, they're about to announce their next rate cut. And if you look at the expectation, they're looking at 50 basis points. So the next rate cut is going to be bringing down, as expectation goes, is 3.75%. So if you really look at all the central banks, Bank of Canada is really the most dovish one. They're the first one who started cut rates, and they're the one who continue to cut rates. And again, remember, they are the one, usually US and the Canada kind of goes more hand in hand. Now the expectation for US is to cut rates only by 25 basis points because we saw good data. Now the question is, does the Bank of Canada continues with that 50 basis point or do they scale back and go 25? Remember, market reacts the most when there is a disparity between what the expectation was and what the outcome is. Now, if they come up with a 50 basis point, I think that's more like priced in here into the markets. We're not really seeing a big movement going into it. But if there's sort of if they do a 25, I think that probably be a bigger move here. But overall, I won't be surprised to do a 50 because Bank of Canada has clearly been more worried about their growth. The numbers have been more shaky, and then we are also looking at being more dovish here. Now, outside of that, the only other thing that I really like next week is these PMI numbers. Remember, now, 2 years ago or even a year ago, we were all worried about when the inflation number comes out. That's really where we saw big moves. Notice that we're not really seeing that now. The inflation is not really causing the big moves. It's the jobs number that causes the big moves. Earlier this week, we had the Aussie employment report, and we saw an initial jump right off that news. So that's what's moving the markets. And these are economic data, which again indicates what the growth is happening. So services and manufacturing PMI for both for the euro, USD, and for the pound, they're all coming out on Thursday. So Thursday again is the one that I'm excited for. But going into it for the early part of next week, I see that the only Bank of Canada is the one that I'll be paying attention to. But as far as the broader markets goes, markets are more happy here. So we're not really getting a big boost or big sort of jump from the market volatility here. Now, that's really what the focus is next week. Market trends, again, likely to remain bullish. There's a risk on sentiment. Nothing is changing there. But what we can find opportunity is where the Bank of Canada is. That's coming on Tuesday. But then most importantly, Thursday for these PMI numbers. Now, let's just jump into our currency analysis and take a look at technical setups one by one. So starting with the crypto outlook, you can see that, let's just jump right here in the chart here. You can see that this crypto really is the one, the Bitcoin is the one that looks the best here. We had a nice clean break and it just continued to moving higher. So no sort of a retest here. So Bitcoin, again, overall, both velocity and for the trend is doing the best. Now, if you go in the other ones, you can notice that the technical setups are not the best. Even though we got a nice jump in Bitcoin Cash, it's right up against that resistance level here. But overall, you can see the velocity is going to pull back a little bit here as well. Now, taking a look at Ethereum, Ethereum is not there yet, based on what the Bitcoin is doing. Ethereum is clearly underperforming. So until it really gives us a true breakout, we'll probably see a more pickup in activity. But for now, I think Bitcoin seems to be a better option here. And then lastly, we see Litecoin. Again, technically, this one looks nice as well. So but again, if I have to pick between the Litecoin and Bitcoin, I'll definitely go with Bitcoin. But that's really where we are. I know this year is not the easiest one for cryptos as far as the buy long term. They do stall at a certain point. You can see that we have the resistance here in place. So ultimately, when we really start to break, those all-time highs or those 52-week highs, that's when it really tends to keep running. Now, let's just take a look at Forex outlook and let's see what the currencies are doing. So let's start with the dollar. And again, you can see that dollar had a beautiful reversal, starting of the month, going from all the way down here, -2, to all the way here, +2. Now, if you take a look at the price action here, it's kind of stalling a little bit here. They can see that in this velocity chart where, the things are sort of weakening a little bit. But remember, nothing too major here. It's just a normal correction in this big run over here. You can see that how positive or how strong this move has been, that on daily chart, we've only had two daily closes on the downside. But overall, we have more on the upside. So we'll see what happens next week. Does this pull back a little bit? And again, that'll be a healthy pullback because we're still above the 20, the 50. We have the shorter term going above the 50 over here. So looking for any sort of pause, any sort of pullback, I think will be a good one to buy into. But remember, that's what the technicals are telling us. Now, fundamentally, if the economic data will start to weaken here a little bit, I won't be surprised that dollar weakens along with it as well. So you really, have to find the best scenario where technicals and fundamentals match. Right now, the technicals and fundamentals are matching. But if they start to kind of deviate or they start to weaken, that's where we can see a little bit of a pullback here. But overall, I must say that, the dollar hasn't really given us that much opportunity, in the last 24 to 48 hours. Overall, dollar has been more upside. It's been a one-way trade. It hasn't been really a big two-way trade. It's just only going up. Now, if you look at the yen's kind of gone sideways as well. And that's what I talk about, how things kind of go in wave. Remember how yen was moving so much in August and in September. Now things have kind of gone sideways here. So daily chart on the yen going sideways. It's still below the 20 to 50. So overall, the trend remains weak. It's just in a consolidation phase. In 2 weeks, we had the Bank of Japan raise statement again. So we'll see if that started to cause a stir here. But clearly, a bit of a sideways price action here. So not really looking to jump on until, I get that clean break here. So set up an alert here on the currency basket. If it breaks below, again, that's a sign to go start being active on the yen here. Now, the Swiss franc is another currency that if I would say that just look at it and don't be, try to call a bullish or bearish here. This is a sideways currency. This has been sideways for a couple of months now. I mean, going back, even as you can see back in August as well is sideways. September is all sideways. So again, in sideways currencies, you don't want to pay too much attention to, the trend. Again, there's no trend, but you can really trade in between these ranges until it breaks out. And you can see that how consistent these ranges are. As soon as we get to the support, eventually start to rise. We get towards that resistance level, it start to pull back. So, as far as the trading, sideways trading strategy goes, this is again fits perfectly in that range bar price action here. But I don't really have a strong outlook here on this Swiss franc here. Now on the euro, you can see that this thing was also trending lower, again below the 50-day moving average, but got a nice little bear rally here, pulling back. So we'll see where it goes. Again, if I take a look at it, compare, looking at all the European currencies, they're not really going anywhere. Seeing that the Swiss franc going anywhere, euro, you can see even in the past month or two, they haven't really made a big significant change here as far as the percentage goes. Now, out of all the European currencies, I like the pound the best. You can see that we are right up against our resistance. We are still a +2 below. So this one again looks the better price action out of the euro, even if this is franc. This was more directional here. Now let's take a look at some of the growth currencies. So here we are with the Canada, and you can see that this thing is also range bound as well. It's flopping back and forth between that range. And remember, this is where it's kind of deviating from the USD as well. And that clearly is shown in that change in the rate change in the policy. They're more dovish than the US is. So as we go in next week, like I said, this is again not giving me an indication on a good bullish or bearish sign here. This is range bound. So don't really love the trade on this one unless we're really trading the range here. But I think if they do cut rates, I won't be surprised that the initial price action is to the downside, but we just don't know what's going to precede that. As you can see that what happened this week when we had the CPI numbers, initially we got a push down, and then right after that we got a bit of a rally here, and then that rally slowly fizzling away. So that's what happens when the trends are not there. The price is going to flip-flop back and forth without much of a follow-through. Now Aussie, I would say that this thing is kind of holding steady within this range, but this has also gone range bound as well. It is, you can see we got a nice little bounce here off that employment report, and then since then it's kind of stalled right here in between. So again, another one goes in the list of mine here. I don't want to be, this probably be range bound here. If you're looking for a breakout, it needs to break above it. If you're looking for a breakdown, it needs to break below it. But between that, it can consolidate here. And then lastly, we are looking at the Kiwi, and you can see this thing is also kind of stalling right at the support level too. So right now you can see that how these ranges are more evident than the moving averages that are kind of going sideways. So that's why I'm getting more of that sideways price action, and I will be much more confident in making a trade once it really breaks that support or resistance level. But meanwhile, we can just go back and forth where you could have a couple of good days, couple of down days, but just not really advancing or dropping, more than what these ranges here. So that's where we are. As far as the trend score goes, I know we're looking at Kiwi more as a downtrend, and we're looking at the yen as a downtrend. But overall, you can see things are gonna consolidating here a little bit. Like the CAD is consolidating. Swiss franc is consolidating. It's a whole lot of currencies that are consolidating. Dollar is the one that was really moving, and that could go even sideways as well. Again, data dependent as well. So what you want to do is want to be only looking at things that, first of all, look at where the better direction is. Pound is giving a better direction. Dollar is giving a better direction. But again, there are weeks where there's just not a whole lot happening. And those are the weeks that you want to be more on the sidelines. As far as the velocity goes, you can see that it's kind of all over the place. But as you combine that with the trend score, that's just not really giving you the best scores here. Pound has a good trend score, but the velocity was not that strong. So you can see that today, again, was not a great trading day. So let's just jump into the possible trades ahead and see what we can find the best looking chart going to next week.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, looking at a chart, I'm just going to point out a couple of things here. I had a lot of questions about the dollar, and you can see that dollar, it finally seems like it's kind of going below the moving average. The 4-hour chart is finally showing more of a relative weakness. But again, remember, this is still a smaller percentage move. So we don't want to be jumping the gun here on the dollar. Dollar is the one that is not falling the way it was. So there's still some relative strength to it. But like I said, the economic data is the one that's going to really dictate it. So let's just talk about the first event that we have next week. That's the Bank of Canada rate cut. Dollar CAD. You can see dollar CAD. This was quite a one-day trade. I'm going to talk about, look at 4-hour chart. It just went from 134 area to 138. That's a massive run. After that, you can see that it did pull back for that 2 days, and now it started to go back up again. So it's based on the technical setup, this looks like it wants to break out higher. And even though if it break out higher, the next level of resistance is going to be about 39 area. But there's still a room for this to run. But compare, just looking at this chart, this one looks better, more for the upside here. And 4-hour chart too, where you just put your stop right around these levels, and then there's a decent risk to reward trade on those. So CAD is the first one we'll be taking a look at. So let's just say look at Aussie CAD as well. Again, if you go with the CAD bearishness, which setup looks the best? And I think that's what we're looking at. So you can see that how this thing kind of pulled back a little bit here. So don't have a greatest setup on the Aussie CAD. Seems like dollar CAD is the only one that looks the best. How about Kiwi CAD? Not so much. And I know pound is the one that's trending. Let's see what the pound CAD is doing. And the pound CAD, again, probably be looking the best over here. It's sitting about 180, 1.80. The next level of resistance about 181. 4-hour chart probably appears the best. Remember, that's the trade that we're looking going into it. But follow through is a whole different ballgame here. Where you don't want to be buy the rumor, sell the news kind of thing, which again happened in CAD this week. On the CPI, you can see how weak it was, and it got a big push down, and then right after that reversed. We don't want to see that. You want to see the initial move, and it continues moving in that direction. That's what I'm saying. The CAD, I think, is range bound here. This is a resistance. This is support. This can fall right towards the support, but I think at that point, we might look at a bounce here at that point rather than a breakdown. Whenever I get range bound price action, I'm more wary of looking at some big breakout strategies. If you're trading on a daily chart, this is the time to scale back on. But if you're looking at intraday charts, looking at charts that would last you a few hours to maybe a day, again, you can find some setups over there. But I'm not really seeing a whole lot of setup that will take me, 5, 7, 10 days as we want to take a look at on a daily trend. So this, again, dollar, I think it pulled back, but again, that probably be a healthy pullback there as well. So dollar CAD is, again, the one that really jumps out to me here the most. As far as the technical goes, I'm not really liking a whole lot of other pairs, but as we go into next week, we'll take a look at and see what looks the best, what looks the worst. But I'm definitely planning on to be less active than more. Again, I will be looking at more opportunities on a Thursday for the employment events, and then most importantly, taking a look at the Canadian dollar on a Tuesday. But again, keep the powder dry. As we always say around things when are not moving, we want to keep the powder dry. But when things start to move, that's where we want to be active. So in conclusion, again, economic data likely to move the currencies. That's really where we are at the market. So we want to trade what's in front of us. That's where I'm looking for more opportunities around those news events. Like I said, next week, but take a look at the schedule for the following week, and you'd be like, okay, I need to slow down next week because there's a whole lot happening in this 27 till November the 1st. That's where we're going to get a lot more data, a lot more central banks that will likely move more markets here. So that's the game plan here. Always trade the market in front of you and be patient. Thanks for joining. Have a good weekend ahead. We'll see you next week. Cheers.